This is Jim Cook with Plan the Cool Way, and today we're going to be talking about crossing lines. Vladimir Putin decided to cross a line and invade into Ukraine. And what does this mean in terms of stock market in the future for the economy? Is inflation going to run out of control? Let's talk about a couple of those items. So far this year, the stock market has performed not as people would have liked. Because across last year, when the stock market almost went up the entire time, we get lulled into a false sense of security and forget that there is, in fact, risk associated with investments. But there is also time in terms of investments. And time and staying power are two things that are going to become very important when we look at how do we deal with what's going on right now. We have a triple whammy so far, taking the market into a lower territory. And some areas have been lower than others. It doesn't mean all things are down. It's important to know that. But the reality is this. We have inflation numbers that are higher historically than they have been for a period of time, even though the inflation numbers for chunks of time prior to this had been running low. We also have the specter of the Fed raising interest rates. What will that mean? And then we had, until just recently, the thought that Russia might invade Ukraine. Well, since they have invaded Ukraine, one of those three question marks, one of those 3 points of uncertainty has been erased. And while we will see what exactly happens in terms of that particular item, know that in the short term, as uncertainty pops up, so tends the market to pop down. Why? Because people get scared. They're placing bets on the future. And they're like, oh my goodness, what's going to happen? So I tell you this. If you had an economy that was teetering on the brink, unemployment is high, people can't find jobs, things are not looking great, and you start to incorporate global political events, that can basically push something that was somewhat negative into more negative territory. Now, I'm not necessarily talking about the market as a whole. I mean the sentiment of people. However, it's important to know that even with inflation running a bit high, after all, we do have supply chain shortages issues, and we have too much money chasing too few goods, the literal definition of inflation. When the M2 money supply is up where it is, which is basically a measurement of a whole bunch of pile of cash, if that sucker's high and the goods can't be found, you can bet that prices are going to go up. It's the way of it. Will it stay like that forever? No. But when you have that kind of environment, and you have an environment where there's demand for buying, and you have an environment where people can get whatever jobs they want, and companies are having a harder time hiring people, and unemployment numbers are low, you see, that's a very different story than the one that I had just painted, or the picture I had painted just a moment ago. Instead, now we're sitting in a spot where you have an economy that's running relatively hard, albeit because of some juice and gas that have been poured on the fire from both the government and from the Federal Reserve, but it still is trucking along. So let's see what would happen when we look at Ukraine as a whole, and should you be making changes. One, if you are invested with me and are a managed account, not a commission account, a managed account, and you are using the model system that I use, which plans for time, cost, and expenses, when you focus on those three things, we already have sleeves that are more conservative. We have sleeves that have moderate territory, that have the ability to say, I don't necessarily fully participate in the downturn. And then we have stuff that we say, please go ahead and try to grow. I will tell you that the stuff that's going to try to grow is going to be the one that sees the most amount of movement. It's also that which you have more time to weather the storm in. That's by design. So the staying power we have, if this Ukrainian situation ends up being prolonged, says, my goodness, we can wait and try to take advantage of pricing dislocations through rebalancing and say, all right, the grow area had gotten punished a bit, but the other areas had preserved themselves relatively well. Well, what a great time to buy some of that stuff on sale. And that is what happens automatically. So because of this is not a reason to change the course, but rather to say, I understand fully why I'm invested the way I am. I understand that my accounts can and will go up and down in value. And depending at what time period I look at, they may look down or up. It's all conditional. But over the longer term, these will normally say we're going to tick up across time, period. Whether or not you have an invasion of Ukraine, an oil crisis in the 70s, a world war, even though it's not what I'm projecting, I'm thinking back in time, whether you have a virus that hits, it doesn't matter. Like over time, people want the market to go up, and it will end up going in that direction. So let's talk about the Ukrainian side of things. In my opinion, and it's completely my opinion, I think Vladimir Putin is not stupid enough to know that he's like, let's cause a world conflict and have everything fall to pieces. Instead, I think he's going to go in swift and hard. He'll probably try to either neutralize the Ukrainian military and, in essence, castrate this area as a potential Western force of military power. And he may attempt to try to put some of his own people in from a government standpoint. But remember that Ukraine has been independent for 30 plus years? And the populace there will probably not feel great about saying, what are you trying to do with our government, regardless of whether it happens? What does that mean to you? Well, it means that oil prices might go up a little bit, and yet they haven't necessarily spiked up tremendously after this result. Why? Because it was telegraphed. You had the Biden administration warning across the last 3 or 4 weeks multiple times that this could happen. And regardless of the cry wolf aspect of this, the fact is that people knew it was a very realistic possibility. When the unknown becomes less of an unknown and then transfers into a known, the surprise impact of this starts to get cut down. The shock value goes away. Compare that to when the pandemic hit. And when the pandemic hit, you went from, oh, there's some weird virus over in China, but that's not our problem, to, oh my goodness, the governors are literally shutting down all businesses. That's a massive shift and a reaction because we felt we were unprepared mentally. This is not that particular situation. And while I do hope that it is resolved as peacefully and calmly as it can be in these times, I have to say that we will be monitoring the situation when it comes to what is happening with your investments. But the very model of how we place investments in play should suggest that we do not make massive changes when it comes to things like this, that we instead look for the positive opportunities that may come up and could be realized across time. I appreciate your patience as you deal with all these kind of oddities going on in the world right now. And if you have any questions, please feel free to give me a call or reach out to me. Talk to you soon.